Hey guys, Akil here. Welcome back to another Trading Edge video. If you guys are brand new, I'm a Forex trader, trading coach, and one of the co-founders over at tier1trading.com. And this is a weekend edition of a Trading Edge video that we do on our website where we show traders what is on our radar for the week to come. Now, there's a lot on the radar this week. I'm not going to go through all of it because a lot of it is repetitive, but I want to show you an example of a few different situations that I'm eyeing up in the market. Now, before we get into that, just a little bit of house cleaning. One, we have an Ascension webinar coming up April 6th. I still don't have the sign-up details for you yet, but I should have them by the beginning of next week. So make sure you're checking us out on social media. Make sure you're checking out your emails. That way you can reserve your seat. It's a free online 4-day workshop. If you've ever been to them in the past, you know they are amazing and you don't want to miss them. And also, for you guys on the platform, I know originally I didn't plan on being here this week, but thanks to the situation that we're going on or dealing with in the world, I had to cancel the event. I had to cancel our trip. So I will be here next week. So I will be here for the Monday Q&A. I will be here for a full week of live rooms. And in the Monday Q&A session, right, you guys know I've got my hands on the new daily chore indicator. I've been tasked with breaking it, and based off Wednesday's conversation in the live room, I'm actually going to go into testing it and helping you guys really get it to the level that you want to get it to. So we're going to be talking a little bit about my findings and what I've seen so far and what I think may help and what I think will hurt the strategy as well. So it should be a fun Monday Q&A. All right, I'm going to let a little disclaimer thing roll past, and then we'll get started with the charts. All right, we're going to start off on the pound dollar. I'm here on the daily chart, and what I'm looking for on the pound dollar daily here is going to be a structure-based counter trend move. So basically a move in the opposite direction of what price is currently doing. Now, if you look at my notes, I'm not sure if we talked about this. I know we talked about it in the live room. I'm not sure if we talked about it in the Trading Edge last week, but this was the area in which we predicted price would go through, right? Whenever we look at a chart, we go through a 4-step process called identify, predict, decide, execute. And we were saying that if price can break this first yellow line up here, then we would predict that price would go to this level right here. And that's what we did. Now, if you can imagine on a lower time frame, we got a little bit of consolidation at that level. Never got a trading reason, but once we broke below, we have to redo our analysis. And I bring this up because I've had a few conversations lately on social media from traders who are struggling with being trapped in their own analysis, meaning they make this hard prediction, right? They draw this line in the sand that if price action gets here, I have to be long, and that's okay. But then they stay that way, right? Once price breaks that level, and instead of redoing their analysis, they still want to hold on to that bias. And you know, we said this in last week's video or the midweek video that I put out. We have to be predictive in our analysis and reactive in our execution. So we want to predict, but then we want to wait and see that price actually gives us the clues to let us know that we are on the right side. And if it doesn't, if it violates a level, whether you've gotten into a trade or you haven't, you have to kind of wipe the slate clean. There we go. It's early Saturday morning, and restart. And that's what we did. And we had a few traders on the platform that had a pretty good trading opportunity here. I'll show you it on the range bar chart. Probably be a little bit better on a minute chart. You can see this was that consolidation right at that level. Market kind of came here, went sideways for a little bit, broke and closed below, right? Lower low, lower close. We got our pullback trade right here. Here is the entry, and they were able to ride it down. And we're going to have a similar thing right here as well. Obviously, just less room for expansion. But what we're worrying about is this, right? So we are coming down into another level of previous structure. These lows right here, right around that 122 even handle. And this is where you want to look for a hold, right? You want to see price action get to that level. This is going to be one of our decision points. You want to see price action get to that level, and then you want to look for proof that it is more likely to hold than not. And then you can set up your counter trend trading move. And I tell you what, in a situation like this, because the market's ranges have picked up drastically, that counter trend move could be a retest all the way up to 125. So you can look for a 300 pip move from 122 to 125 as a counter trend play, something like this up to this level. Now, With that being said, and this was a topic of last week's Q&A, this is a level where we have what? Who can remember? What is this called? This is a level where we have overlapping levels of structure, and a very expensive lesson that I've learned throughout my career in the markets is that when you have overlapping levels of structure, the lower level, or the furthest level away, in this case, lowest level, is going to be the more powerful level. And it's very easy for traders to get kind of tricked or trapped, meaning they see a golden opportunity at the first level. They put their stops maybe right below that first level. The market spikes down between that first level. You get skunked out of the trade, and then it reverses to do exactly what you thought it would do. However, you're not involved, and everyone is bragging about it, and you're sitting there saying, dang it, it got me. And then of course you blame your broker because your broker knew where your stops were and they hunted you. Well, it's not your broker. It's just smart traders know where underexperienced traders put stop losses at. Let's put it that way. You want to be very careful here. So in last Monday's Q&A, we talked about looking for conservative reversals, how your most aggressive reversal is going to be your V reversal. That's going to be your best one. You can see a good example of that kind of, actually right here. Classic V reversal. Be more conservative with your reversals. Look for more conservative ones, such as double tops, double bottoms, such as 2618, such as head and shoulders, such as kind of sideways channels and then breaks. And that will give you a little bit more confirmation that price is likely to move in that direction than not. So check out pound dollar here, 122 even for your first counter trend trading opportunity. Obviously, if that level is broken, back down to about 119.50s, 120 is going to be another opportunity. But in my opinion, not as good. This is going to be the better opportunity because it has more room for expansion. So the next pair we're going to take a look at is going to be on the Euro Yen, and I'm here on the 4-hour chart, so 240-minute chart. And we're going to take a look at another advanced pattern formation. And before we get into that, I want to share with you a comment I got from a recent YouTube video that I did. And I don't remember it word for word because I didn't pay a lot of attention to it. But essentially the trader was saying, Akil, patterns don't work. They're just a marketing tool. And I've done extensive testing on it and blah, 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 blah. And I bring this up because I know many of you guys, are active on social media, and you're going to see a lot of that. You're going to see a lot of traders, whether you share an idea, whether it's pattern trading, whether it's support and resistance, whether it's some indicator type of deal, you're going to run into traders that say it doesn't work. And at first, right, you may take that to heart. You may be a newer trader. You may see someone, right, Pipzilla out there that's got 10 million followers and he's got this state of authority. And you may start to lose confidence in what you're doing. And that's a very, 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 very bad thing. That's also the reason why we do back testing, right? When you've done your back testing, when you've gone through historical data, when you've traded live and you've seen the results firsthand, the good and the bad, you have complete confidence in what you're doing, and you can really care less about what anyone said because you've done the work. But for you guys that are trading out there, and I know some of you are, for you guys that are trading out there that are trying to hop right into something and haven't done the work, you haven't back tested, you kind of just taken our word for it that it works, it's going to start to really chip at your confidence. And if we know anything in trading, your confidence is key, right? If you're not 100% confident in what you're doing, that's when those little psychological battles are going to leak in, right? Those psychological demons are going to leak in and they're going to start tearing you apart, especially during drawdowns. But I would say this, right? In order to overcome that, before you do your back testing and whatnot, understand this, right? There are millions of ways to trade the market. There are hundreds and thousands of different strategies that you can use. And within those hundreds and thousands of different strategies, every trader uses them a slightly different way, right? You ever heard of a moving average cross, right? I hate moving average crosses. I think it's a stupid strategy, but there are traders out there making massive amounts of money off of it, right? And within those moving average cross strategies, there are different moving averages that they use, 21 to 34, to 50 and to 20, right? So stuff works, and you never want to judge another trader on what they're doing unless you've tested it the exact same way. And that's what I told this trader. I said, hey man, your eyes could be different. Maybe you're looking at a different set of pairs. Maybe you're on a different time frame. There's so many moving parts in there for why your results aren't the way you want them to be. And my guess is that the trader doesn't actually know how to trade patterns. They're kind of, maybe they read a book or maybe they saw a few videos and they're just eyeballing it. And what they're identifying isn't really what they they think they are. But I got on that rant because Euro Yen has been a pattern frenzy. This has had a lot of advanced pattern formations on it. You guys know this year has been very strong for me with advanced pattern formations. Last year was not. But this year, over 75% of the trades that I've taken are advanced pattern formations, and I'm having a pretty good year with them. And you can see a few that are on the chart right here. I'm not going to draw all of them out to really perfection, but you can see X to A to B, B to C, C to D, right? Within the junk that we have in the market. And this is why there's been so many pattern formations this year, because a lot of what we had is either junk and then some type of sporadic movement. You can see different pattern formation. Now, this was a winner right here. This one was actually a loser for me. This one actually stopped me out right up here and then ran down, right? Took my money and ran without me. We were close to getting a cipher. This one actually didn't complete high enough. We needed to come about up here. But you can see within this chart, there's so many opportunities that we've had. This was another winner. Boom. And now we're setting up our most recent version of patterns, right? By the way, this is pretty cool, right? When you can look at something like this, most of you are probably looking at the chart and just saw, again, a BOJ, right? A complete bunch of junk. But when you know what to look for and when you've trained your eyes to identify these type of things, these are hidden gems. And again, you know, not all of them win, right? Patterns aren't 100% by any means. You know, depending on what you trade, they're going to range from 50 to 70%. But they're good finds, especially in consolidative markets. And again, this year's been, I don't want to jinx it, this year's been great so far. But anyway, here's our most recent addition to the Euro Yen pattern trade, right? We have X to A right here, our initial impulse leg, swing high to swing low. Our first retracement, A to B, that's going to give us a deep B retracement at about 69.7. Our B to C retracement right down here. And then what we're looking for is a decompletion right up here. And as I mentioned before, we just missed it, right? We had our Gartley, this is a bearish Gartley pattern, by the way. We had our Gartley entry for our D leg right at about 120.40. And you can see the highs of this candle came up to about 120.31, right? So I front run by 5, so it still wouldn't have been filled even if you front ran on this. Now, one thing to keep in mind from a risk perspective is that we have been seeing the volatility pick up in the market, obviously. So a lot of these patterns are bigger than you may expect, right? You can see that this one has a risk of about 158 pips, a reward of about 163. So you want to make sure that you check your risk parameters and make sure this is a pattern formation that you can actually take before entering the trade. Because again, great traders or good traders are great risk managers. So we're always thinking about risk management first. But Euro Yen 4-hour chart, potential bear Gartley 120.40s. All right, next we're going to head over to the pound yen, aka the beast. That's what our traders like to call it. And this is going to be another pattern / structure trade, right? So in our first setup, we talked about a structure opportunity. In our last setup, we talked about a pattern opportunity. Here's an example of where you can kind of put 2 and 2 together. And again, trading is all about, it's not just doing one thing great. I advise getting, do one thing great to start, but evolve and be a true technician, be a true reader and analyst of price action instead of just someone that knows a strategy. Trust me, that will take you a lot further, and it will allow you to navigate any type of market conditions, from the high volatility, crazy markets to the low volatility, boring markets. But what we have here is first and foremost very similar to what we looked at with the pound dollar, right? Prices coming back down into a previous level of structure. This is a nice little structure swap zone. Again, Peter Brandt says it better than me. He calls it the ice zone. I'm corny, so I say structure swap, but again, it's the best that I can do. Anyway, it's a zone where price action found support at one point. Once support was broken, it became resistance. These are pretty cool levels in the market where you can make some really decent predictions that price is going to react again. Doesn't mean that price is going to follow through, but price is going to react. This is also an overlapping level of structure because obviously we have structure lower as well. So again, this is another one where we want to be careful with our counter trend moves. It's also not the greatest opportunity because we did something like this. We spiked down here, we retraced back up, and then we came down. So, for someone like me, that really kills the profitability because my targets are based off of structure. So when that structure is created, it kind of throws off how far I can actually look for a reversal. Again, going back to the pound dollar, if you guys remember that example, was a clean, as of right now, was a clean shot to those target levels from 122 to 125. This one isn't. So originally, this wasn't an opportunity that I really cared about. I looked at the chart in the daily, and I wrote on my notes about where I should look for, and I said, meh, right? Not much on the radar. But as I went down to the lower time frame, I was able to find a way to get involved. I'm still not excited about any type of longer term counter trend trade, but when I looked into it, I said, hey, there's not even a way I can enter this trade. But if we go down to the 60 again, you can see price action coming down. We're kind of basing off in a 2618 type of deal. We never technically had a higher high, higher close, but you can see price traded above the highs and is now retracing back down. But one thing that we can do here is this, right? If we take this most recent leg, right, the low of this double bottom, you can say, to our swing up, this most recent swing, that can be our X to A. Our retracement right here could be our X to B, X to A to B. The second retracement, our B to C. And if price action were to come back down and retest this level, this would be a CD completion for another Gartley. So again, this is an opportunity where, if you're a trader that's looking for a 2618, you could look at this on the 15-minute chart as well. We're just gonna stay on the hourly here because I feel like it. But you can look at it on the 15, and that'll shrink that risk up a lot, so you can make it actually match your profile. But if you're looking at this as a 2618 trader and you didn't have the opportunity to get involved because you technically don't have the higher high, higher close, this will be a secondary reason to do so. You can say, okay, I can't trade the 2618, but I wanted to get involved in a pullback. Now this Gartley pattern gives you a reason to get involved in a pullback, and a very aggressive reason. Now again, I wouldn't trade it up. Just from a technical perspective, I don't see any reason. I don't see any reason or any place that I would feel comfortable with trading for extended targets with a counter trend move. So I'd be looking for kind of a quick in and out type of deal. Now I'm gonna look at this on the 15 real quick, just curious. I usually don't go down to these time frames aside from the live room, so it cleans it up a little bit. And you can see, here's what I meant about the risk reward, right? Because risk rewards, I base my risk rewards off of ATRs. You don't have to do it that way. But obviously the ATR on the 15-minute chart is going to be a lot smaller than it is on the hourly. So you can see that 130-something pip risk loses by about 30 pips down to about 100. Just curious now, too, with a range bar chart, it's going to be too big. All right, we'll look at that in the live room. But anyway, so pound yen here, coming down to a potential structure-based trade. Good example of where you can use a pattern formation and structure together. Again, just be aware of your risk reward. You may have to adjust where you enter this pattern if you do require that one-to-one risk reward. So you may need to really enter below the D leg. That way you don't mess up your risk profile. All right, next up is the Aussie Canada, and I'm gonna zoom out a little bit on the Aussie Canada. I don't have a lot of days loaded up on my chart. I'm gonna go to TradingView and just load up a weekly for you guys real quick if I can get on here. And I want to give you some perspective of where the Aussie Canada is trading, right? You can see the red line down here. This is where current price is at. If we zoom back on this purple line, that's where the previous level of structure support was at. And you can see that we actually did a break and close below it. Now, again, we are at other levels of structure, but it is a telling sign that we're able to break and close below this low. And what I would look for throughout the week is a trend continuation opportunity. Now, we're not in no man's land. You have to be smart with where you place your targets, and we can talk about that as the week continues. But what I'll be looking for is a pullback and an opportunity to get short. All right, so if we go down to a 4-hour chart real quick, you can see that we have a nice level of structure created right here for our VS1s. Maybe we get a little bit of relief up to this level, and we get a chance to get involved in a pullback trade, and we can trade it as either first targets at a retest of previous structural lows and extended targets for target twos, or maybe just full out extended targets and look for this to ride down. We can do that. Again, I want to see the pullback first before we start making predictions about where we could take it to, because then I'll be able to bring on my fibs and do one-to-one measure moves and all that fun stuff. But just wanted to give you guys a heads up of what to look for. Again, longer term perspective on the 4-hour chart to daily, look for that pullback. I'm sure you can do the same thing on the hourly, right? We're gonna have a lower zone on the hourly here as well. If I don't blow up my charts, right? You can see moving back up into our VS1s about 8650s. Is that the same level? Yep, about the same level, 8650s. And then again, something that we've been doing during the week a lot, because the markets have been a little ridiculous. We've been looking on the range bar charts, right? And the range bar charts, what they do is they give you a different perspective of what price looks like. So, for example, here's that pound dollar example that we looked at earlier, where on, I think, a 4-hour chart, it was just a straight shot down. You can see here a lot of ebbs and flows, a lot of hidden opportunities to enter into a trend. So I would do the same thing on the Aussie Canada. I'm just curious, 60 is our ATR on the hourly. So I was do the same thing here on the Aussie Canada. And again, we're already getting our first pullback right now. Just look for multiple opportunities to get involved on a pullback trade to the downside. And again, what we'll do during the week is we'll kind of measure out where that ultimate projection is, and then we'll kind of bracket that off on our charts and saying, hey, I'm looking to get short anywhere from here to here, and then we'll see if we can get after it in the live room. Now, before we get into our last pair, I do want to remind you guys that we do have an Ascension workshop coming up on April 6th. It's going to be a 4-day online workshop, completely free, and I advise that you start marking in your schedule and making time for you to join. Again, for you guys, if you've ever been there before, you know our workshops are amazing. You learn more for free in that week than what you learn by buying courses from other people. And for you guys that have been to them before, these are always good refreshers. I'm a big believer in continued education, practicing the basics in order to stay sharp. So it's always good to put yourself in that situation where you get a little bit of a reminder, a little bit of a refresher, and maybe you learn something new or you see something in a different light, because now you're able to get more perspective in your trading since you have more experience in the market. So check it out, April 6th. Again, I don't have the sign-up sheet for you yet, but just make sure you mark your calendars. I'll have it soon. I'm sure you'll see it all over www.tier1trading.com. So lastly, we're going to take a look at oil, this wild boy, right? Oil. You can see here on the weekly, we have rallied all the way down to a previous level of structure support, and then we started to see a little bit of a rejection off of that level. Now, what I want to do here on oils, I want to mark a few levels, and this is what I do on really on my weekends, right? I go through that pre-market checklist that many of you guys have, and I draw out or I write out the key levels of support resistance, and that really allows me to make my predictions. I also, some of you guys may not do this, I love marking up the charts and leaving them there. Right, I typically have different charts for the education stuff because, you know, we're doing examples not just for myself but for other traders. But I always keep a chart on the side I just have marked up. So I have notes, I have lines, and those are just quick reminders of what I was looking at in the market. And, you know, there's no shame in doing that. I know everyone wants to have a clean chart, but, you know, mark it up, put notes on it, right? There's nothing wrong. All it is helpful. So the notes that I want to have on this chart is, if price action is going to continue, kind of this retracement, this rejection of previous structure and maybe bounce up a little bit for some relief, where are we likely to go to? And there's a level right here that stands out, right? Previous level of structure. And then, of course, there's this major level right here where we have two tests right around 42.32s. So as I go down to a daily chart, I think we're going to have to go down to a 4-hour. I guess first and foremost on the daily chart, you're going to have a double bottom right here. Probably not the best double bottom scenario, because if you were to enter this right now, let me just see what that would look like. Obviously, we were traced off that level. If you're looking at targets at this, get down there. Targets at this first conservative level that's going to be there. Stops below the lows. Maybe you can eke out a 1-to-1 if you entered a little bit lower. So maybe it's not as bad as I thought. But again, I want to be very cautious with oil, right? This is something that has been very responsive to the economic conditions and the fundamentals that are going on. So it's a little bit different than, you know, how we technically trade the Forex market. You know, with commodities, there is sometimes that fundamental bias that needs to be taken into account as well. Doesn't mean you need to trade off of that fundamental bias, but it can affect how aggressive or conservative you want to be given the direction that you're looking to get involved with. So from a conservative approach, right, if we go down to the 4-hour chart, here's what I would look for. again, I would look for another one of those complex complex reversals, right? So instead of just being aggressive and buying it right here, waiting for the market to really show me that it's likely to continue up. And what I'd love to see is a violation of these highs. So we've already achieved new highs here. This is the high watermark of this initial pullback, this level of relief. We've retraced lower, but we haven't been able to create equal lows, which does tell me there's some type of buying pressure down here. We could put in a pattern formation. I guess I'll talk about that in a little bit. But what I would look for from a counter trend trading perspective is a violation of these highs, and that really being my trigger to look for that long opportunity. That gives me a little bit more confirmation that this relief could be a little bit longer than just this quick kind of bounce there. So we'll keep an eye on this throughout the week as well, but looking for a violation. Again, a violation, higher high and higher close of this level, and then starting to set up our game plan for how we want to attack it moving forward. Now, real quick, just caught my eye right now. I didn't even notice this. Okay, never mind. It's a little... Looked like a potential advanced pattern here in the 4 hour. I guess it could be. It's a little small, but I'll draw it out anyway for you guys if you're looking to get short. This is going to be your X to A. We just missed a 618 retracement, so that means we're on bat pattern alert. You can have a potential bear bat looking like this: X to A to B, B to C, C to D for this little small fella right there. So if you're someone that is looking to get short, that could be a reason that you use as well. So I hope you guys enjoyed this video. As always, do me a favor, hit that like button, subscribe if you're new, and share this. Leave questions and comments below. I read through all of them. I answer them. Really good comment after last week's video. So make sure you check, I think it was the midweek video, either midweek video or last week video by Phil. It was a storybook, so it's going to take you a while to read through, but he's a trader that I've worked with in the past. He is a great trader and a great educator now. If you ever get a chance to read anything by him, it's always insightful because he's someone that has the perspective of literally coming from nothing. He was literally someone that I spoke to. He followed me on social media. He followed me on YouTube, watched all my videos, and I remember having a conversation with him where he was like, Akil, I want to buy your course, but my situation isn't the greatest. I'm going to start saving right now, and I'm going to see you in a year. And you can imagine I hear that all the time from people, and I'm like, sure, I did trust Phil because I knew him a little bit, but I take it for what it's worth. People say that all the time, and most people don't follow through. Well, lo and behold, like a few months later, he hit me up. He said, hey, I'm ready to join. I'm like, dude, I thought you said a year. It's only been like 6 months. He's like, yeah, well, things changed. I was able to be more aggressive and really work towards my goal, and I'm ready. And he hopped in. He had the hunger and the urgency because it meant something for him. I think that's important. When you're treating this like a hobby, if you have just like fun money you're throwing at trading, that's not as important to you. It's when you literally have no way out. Right? That's when it becomes important. I know for me, again, I quit my 3 jobs. Trading had to work. So I was super hungry. He was the same way, and he approached it. He approached the course material very seriously. He approached his training very seriously. And he turned himself into a great trader, and now is giving back by educating people as well. So he's great insights. Make sure you read what he has to say. It was an awesome comment. I don't know how I got into that, but I'll see you guys next week. I'll see you guys, Tier 1 members. I'll see you guys throughout the week, obviously, Monday Q&A and in the live room. If you guys want to get involved in the live room, it's part of our trial membership. It costs $1. There's no automatic bill or anything like that. We just charge $1 to keep kind of the trolls out. But just head over to www.tier1trading.com. You can sign up for that 1-week trial. You can get involved in some courses. You can get involved in the live room. And of course, you can get involved with our great network of traders. They'll love to slap you around a little bit and get your mind right about what it takes to be successful in trading. So until next time, plan your trade your plan. You guys take care. You have a great weekend. Stay safe.